Good morning, everybody, and welcome back to Beat the Bell, presented by King Capital. Hope you guys all had an awesome weekend. It is time to trade. It is Monday. We are back into the swing of things. On today's panel, we have Mander. Mander, good morning. How you doing?
Good morning. Loving the energy. Happy Monday. Full trading week ahead. I'm excited.
Always. There's no other way to approach it. If you don't show up on Mondays with energy, you're in trouble. Diamond Trades, good morning.
You were talking way too fast for me at 8:30 on a Monday, but I'm excited to go. I think that we're gonna have a great week. Like Mander said, this is our first full week in a couple of weeks, so I'm excited to get after it. Should be going.
All right, and Stock Snipa, good morning.
Good morning. Very excited for this week coming up. Let's get to it.
Can you show us the Snipa chain, please? Can we get a closer look at that? That's the piece right there.
Oh, absolutely.
Let's eat some bags, GBA.
Oh, yeah.
How about that? The Snipa chain. All right. Fed forecast and economic calendar. It's Monday, so this is a big one. Everybody pay attention here. Take it away, guys.
For sure. So we'll start with the economic calendar for this week. We've got several Fed speakers today and economic optimism tomorrow, but things really heat up starting on Wednesday with CPI and core CPI at 8:30 before the market opens. We've got another Fed speaker on Wednesday. Thursday, we've got PPI as well as those initial jobless claims. And then Friday, we are going to have exported input prices and UMISH consumer sentiment preliminary for the month of July. So a decent week as far as high impact news goes. Similar to last week. So last week's trading, the market actually closed red in what was a pretty choppy week of trading amid several economic data releases. The private sector nearly doubled expectations for jobs, basically added in the month of June, which some attribute to seasonal demand in certain sectors to start the summer. NFP report came in at 209,000, which was below expectations of 250,000. So this has sort of been a trend that we've been seeing over the past several NFPs. The economy adding less jobs can sort of be viewed through two lenses. The first, it takes some pressure off of inflation down the road, as the job market continues to cool off from its peaks in January. One of the upward drivers on inflationary pressures was wage inflation. And, people are hoping that with these dropping non-farm payrolls, you may see a little bit of a pullback from that sort of inflationary effect that the tight labor market was having. And then another way that you could view it is that this is, the weakened demand for workers is actually as a result of weakened demand as a whole throughout the economy. And as you can see here, we got this actually from Aisha over at Macrovisor. The NFP prints that we've been seeing have just sort of continually been coming down over the last several months. And, to that point, actually, they revised down in this NFP report that just came out, they revised down both April and May. So I'll go ahead and read that revision that they put out. The change in total non-farm payroll employment for April was revised down by 77,000 from 294 to 217K. And the change for May was revised down by 33,000 from 339 to 306. So with these revisions, employment in April and May combined was about 110,000 lower than previously reported, right? So what we're seeing here is not only did the number on Friday come in quite lighter than expectations, but also they revised down the numbers from the last 2 months, a cumulative 110,000. So when you combine that with the 40,000 or so miss, that's about 150,000 less jobs than we had sort of anticipated we would have created over the last 3 months. So that's definitely something to pay attention to as well. As we know that the Fed has been citing the labor market as one of the reasons for some of these upward inflationary pressures. So definitely going to keep an eye there going forward. Last thing I've got is that earnings season. Earnings season is coming. Companies will begin reporting their second quarter earnings this week, with Delta and PepsiCo reporting Thursday before several of Wall Street's largest players, JP Morgan, Citibank, Wells Fargo, BlackRock, State Street, will report on Friday. Analysts are expecting corporate profits to have dropped 7.2% in the second quarter relative to the same period last year. If so, that would mark the largest decline since COVID shut down businesses across the globe. The market has rallied aggressively, obviously, in the first half of the year, with the S&P up, with the NASDAQ and the S&P 500 up 31% and 15% respectively. So it'll be interesting to see if either their second quarter performance or their forward guidance justifies, where some of these stocks are valued at today. So I'm sure that earnings season will heat up here shortly. Mander, what do you got?
I'm kind of fired up to see the banks on Friday. Obviously, I think the banks always give us that first tell into what we can expect as far as the consumers doing, how they're holding off with debt, and then what we kind of can expect into tech. But mostly Delta. If you saw Delta was up 13% over the last 2 weeks, that was because their CEO came out pre-earnings and said they're expecting a change from a recovery to a secular growth cycle in travel as we have this kind of post-lockdown boom in travel. He's expecting like a revenge travel theme to take place where people who hadn't traveled in so long are now going to aggressively take flights and go places they weren't able to for years. He marked this at a $300 billion revenue cap for this revenge travel sector here that he's expecting to come up. So all the airlines boomed over the last 2 weeks. I'm excited to see how those numbers come out on Thursday. But what I wanted to cover today was a deeper dive into CPI here, what we can expect for the print, and then what we can expect moving forward for the coming months. So if you guys remember over the past few prints, housing, cars, and services were all those really sticky inputs into inflation that kept us elevated for so long there. Even while we saw a bunch of the other sectors come down, those three had us really elevated. And moving forward here, housing is expected to come down significantly. So the way this is measured and calculated for the inflation prints, it works on a 1-year lag. So those elevated numbers we had all of last year and really the start of this year, they were really just a reflection of the sharp increase we saw in real estate prices and rent in 2021 and the start of 2022. And so now moving forward, those have stabilized significantly, as you guys have seen with mortgages down, with interest rates so high. The housing sector has cooled off significantly. And so moving forward here, we are going to start seeing rent and housing in the inflation print start to cool off as well, as apartment units have really reached 40-year highs thanks to a lot of this new construction and the work from home movement amid interest rate hikes, bringing down housing prices. All of this makes up 40% of the core CPI print and 20% of the Fed's preferred core PCE. So analysts are expecting a 5% core CPI print to come in this week, down from 5.3%. And then Goldman economists are expecting PCE to fall all the way to 3.5% by December, which will be great progress. Also with used car prices, if you guys remember, we had crazy bottlenecks in supply chain in the car industry. Dealers were sitting on 35 days worth of supply, down from 85 pre-pandemic. So really you had new cars getting bottled up with production and the shutdowns of factories, driving people to get used cars versus new cars because they weren't able to get them. Tesla was on months and months of backlog. All really popular cars were not able to produce them at the rate that people wanted them. And so now we're starting to see car production peak up, bringing down used car prices, rent coming down. So really, Goldman, if we get down to 3.5% core PCE by December, that's well over cut in half from the peak, and really just 1.5% to 2% above the Fed's target of 2% there by the end of the year. It's really just in 1 year from where we peaked, going to be all the way down within 2% of their target by December, should that come true. So I think at that point, it'll be interesting to see what the Fed does in December, should we get down that low, because once you get there, it depends on the labor market. I think you're going to have pretty much everything we saw from the bottleneck of the pandemic out of the way. And that's really that baseline would be that 3.5. At that point, it's interesting to see how they move forward and if they're able to conquer it anymore with the hot labor market we have.
Know what that sounds like to me, Mander? That sounds like a soft landing. Sounds like a soft landing to me. I'm just going to throw that out there. But yeah, I mean, look, it is definitely going to it's definitely going to be worth watching. I know that for people who have sort of been building a bull thesis for a while, this is one of those things that they've really been pointing to, right? Is that like wait until the pressures of housing start to come down, right? And that's calculated into the CPI, into the core CPI. That will really aid in this whole process of bringing inflation down to where you want to see it. And so this is finally, when the chickens sort of come home to roost, right? For lack of a better term, I think if that's what you were expecting, this is really where the rubber meets the road. And so I'm very interested to see going forward here how that's going to play an impact into both the Fed's decision making and inflation in general. That'll wrap it up for us here on Fed Forecast. Pass it back to Alejandro.
You got Mander beat with the metaphors there.
Yeah,
Normally it's Mander who's pulling crazy stuff out of his ass. Good job, Diamond. That's
Thank
good.
you, sir.
All right. Let's talk about the S&P. Going to share a couple charts here. I just tweeted that I was going to talk about the setup that we have coming into the week in ES. Ryan, if we could go chart 1, please. Okay, so overnight, we flushed below 44.20. That's the yellow line I have drawn across the screen. The reason that this is an important level is for 2 reasons. This was the breakout spot from June 28th, okay? So this level, when we cleared it, marked the rally that we got to end 2 weeks ago, okay? That Thursday-Friday rally that set off an incredible squeeze. Now, what we got last week was a back test of this level. We traded all the way down and we held 44.20 nearly to the tick. 4119.75 was the low last week. Now, overnight, coming into this week, ES flushed below this level. This does a couple things. Firstly, it's going to stop out longs who have their stop losses below that key level of support. But the recovery of this level is what was key. And so when we recovered this level, this now puts in a false breakdown, which squeezes shorts who got short on the break below this key level of support. So 44.20 is going to be a very, very important level this week. Ryan, if you want to put the next chart on the screen. Okay, so I took this trade this morning, and it was an early one, but the setup was there. So, again, based on this false breakdown setup, I grabbed a long just above that 44.20 when I checked price this morning. And this was good to a run up to the first level of resistance where I take most of my profits and then leave runners. 44.41 is next above here, okay? And we're currently trading at 44.30. But again, 44.20 is going to be that big level. I just explained to you guys why. It was the low of last week. It was the breakout spot from June 28th, 29th rally. So keep that in mind. That's how things are setting up. Now we're going to go over to Stock Snipa, who's got Bet the Bell for us.
For the system, I'm going to pass it over now to Ramsey Rippers for Bet the Bell. Good morning.
Good morning, guys.
What's up, guys? So I'm going to dive right into it. First question, which you guys know exactly what I'm about to ask, green or red? I'm going to have to start it off with Money Mander.
Put me on front stage today. I'm going to take red. I think that that daily candle we saw in Qs and SPY is unfortunately a short 10 times out of 10. So I think we close red today.
Next, I'm going to have to go with Honda.
And on that note, green. Anytime you hear something is 10 out of 10, that's an easy money fade. Rally and store. Nah, I'm just kidding. But based on what I had just discussed and the setup going into this morning, I'm going to go green.
Good take. Diamond, what do you got? Green or red?
I'm going to side with Mander today. I've been getting absolutely assaulted on these, but
now you won the last one, I thought. You won
oh yeah,
red on Friday?
Yeah, because Friday did reverse actually.
That was crazy.
That's a great point. Yeah, we sold
Ryan said you've won 3 in a row.
We sold 150 from the highs. Great point. All right, great point. I was trying to get some sympathy from the crowd. But yeah, I'm gonna go red as well. I think the chart is setting up for AM rally, PM decline.
Okay, yeah, I'm gonna have to honestly take red as well, just because of last week overall. But yeah, I'm gonna go red, but slightly red. Like I'm feeling like a 0.25% red kind of day. Would you rather? I saw this question somewhere on Twitter, and there's credit due somewhere, but I can't remember where I saw it. But would you rather have $1 million in cash today, or would you rather have $5 million in cash and puts that expire on Friday? You cannot sell it no matter what, any circumstances. 1 million cash today or 5 million Friday expiration.
I was gonna say I would just put a stop loss in.
No stops.
I'm definitely gonna go 1 million in the bank.
1 million in the bank.
First off, I wouldn't be able to fucking sleep. I can't even imagine that. But yeah, 1 million in the bank. I mean, what is the theme that we've been seeing? We've been seeing Monday, Tuesday, Wednesday pullback, Thursday, Friday rally. We've seen, the Bulls are in clear control for all of 2023. That is such a scary bet. But I'm curious to hear what the other guys have to say.
Mander, you look a little excited for this one.
Now, you know what? Crazy for me to say because everyone is probably banking on me taking the puts. I would take million in the bank as well. I think like puts have just been getting smoked week after week, going into Thursday, going into Friday. VIX is so low. I would take my million in the bank and then see what I could turn that into by Friday. But I don't want to zero or hero $5 million puts.
Bro, if I got $1 million in the bank, you could best believe I'm not trying to do something crazy with it. I would take those 5 million puts. Not gonna lie. Diamond, what do you got? 1 million in the bank today, 5 million in puts Friday.
I would have to go $1 million in the bank as well.
Oh,
I mean, because that like that a million liquid is.
Are we getting old? We're so risk adverse now.
I don't think
Talk
that's
about
really
risk
risk
adverse,
averse.
dude.
I don't think that's a risk
This
averse.
wouldn't even, if this was like a real situation, it wouldn't even be a question. You're taking a million.
Exactly.
It's a little bit too unrealistic, I think.
Yeah, I also agree. I think what would change it? We need to do the question again on Wednesday, but I think that we would need to change the expiration date because realistically, if you're buying them this close to expiration, like look at like the probabilities, right? Like essentially how you
have like a 10% shot of like
it would essentially be an expected value. What's the expected value of 5 million in puts on Friday? I agree with Alejandro. I honestly think that there's like a 90% chance that those are going to go worthless. Let's say 10% chance that they double and you get 10 million. I mean, what does that put the expected value? 10% a million. Well, I guess that kind of is equal actually. So there you go.
Well, the thing is, the real game changer is that you can't touch them, right? So they have to expire in the money, which is just like insanity.
Yeah, I agree. All right, we're on the same page.
Well, yeah, but I don't even need to explain. Like, I mean, you guys have all witnessed the power of options. You know what $5 million in puts could do.
The
you
power
know what that
of
possibly
options,
be, dude.
Could be 50 million by the end of the week.
Yeah, that could be a super yacht. Like, I was really excited to ask this question. I thought we were gonna have
could be a lid sandwich. Though.
Ask calls on Wednesday, Snipes. That's something that I would consider. Thursday, Friday rally. We've been seeing that. I mean, if you ask me this question on Wednesday, particularly like if it sets up, there's a good chance that I would take the 5 in calls.
I see. Interesting. Yeah. So the next question I got, I'm gonna go ahead and dive into this one. Pennsylvania senators are trying to pass, or they're introducing legislation to legalize marijuana per CBS. Now, do you guys believe that marijuana is something that should be legal nationally, or do you think that we should continue the current system we have right now? But no. What do you guys got, Mander?
Yeah, I think that's really the way this is going. I don't have anything against it. I think it's a great tax revenue for the states. I definitely think the more states that convert over to this, it probably gets federal jurisdiction.
From the Pennsylvania man himself. Hondo, what do you got?
Dude, being in New York, I'll be honest, I forgot that it like wasn't even recreational like everywhere. I mean, like you walk outside and everybody, it's like crazy. Like, everybody's just smoking weed now. I mean, like 10 years ago, you would have never imagined that. It's pretty nuts. I mean, it's like the same thing as smoking a cigarette. I really don't think it's a big deal at all.
Yeah. Diamond, what do you got?
I'm in Hondo's boat. It legalize it already. Enough. Get it over with.
Yeah,
it just seems performative.
Of course, the New York guys say that. Yeah, I mean, to be honest, Philadelphia, just an example. You know, that's like what, man? You know this better than I do. That's like what 5-6 miles from Jersey, something like very small like that.
Not even. It's right on the border. A mile.
Okay, so you can cross a bridge and buy it legally. It's kind of weird. But yeah, that'll wrap it up for Bet the Bell today. I'm going to pass it back to Hondo here.
I want to know what Diamond Dre's is laughing at. I think it's so fun. 5 or 6 miles.
Yeah, we're neighbors.
All right. 8:55. We're wrapping up just a bit early today, about 10 minutes. But that's all we got for you guys. Appreciate everybody who tuned in this morning. We'll be trading live all day in the Kane Capital Discord. You can go to kane-capital.com or scan the QR code on the screen to trade with us. Bless you.
Thanks.
Bless you, son.
Let's have an awesome week, everybody. Have a great rest of your days. We will see you back here on Wednesday morning at 8:30 a.m. Eastern time. Have a good one.